Well, Andrew, buybacks have been in Democrats' crosshairs for a while, but now a prominent Republican is jumping on the bandwagon as well. Senator Marco Rubio is out with a new proposal today aimed at changing the incentive to buy back stock in the first place. Now, his plan would raise the rate on capital gains to make it more comparable to the tax on dividends, which are taxed as individual income. Now, he doesn't say what the new cap gains rate would be, but the theory is that reducing the preferential tax treatment would also reduce the number of buybacks. The trade-off for that higher rate on capital gains, he would provide businesses permanent full expensing. Now, currently, that's set to phase out after 2022. He would also expand the kinds of investments that are eligible for that deduction. A report that Rubio is releasing today suggests that buybacks are now a, quote, non-productive alternative to capital investment. He says that makes it possible to live in a world of higher asset prices, lower investment, and lower worker pay. Guys, remember that Rubio was a reluctant supporter of the GOP tax law. He's been critical of it for helping companies rather than workers ever since it passed. This plan fixes what he is calling a, quote, missed opportunity. Back over to you.
Ylan, I'm trying to understand the new twist on this because Marco Rubio was out in December on the buyback issue, actually, interestingly, ahead of Sanders and Schumer. I'm looking at a tweet on this. He says back then he was saying we should tax buybacks the same as we do dividends and instead favor investing in U.S. jobs by expanding full expensing and making it permanent. Is this just an extension of that conversation?
This is. So he sort of laid out his broad criticism of the tax law and his concern about buybacks. Again, as you mentioned, very early on. What he's doing now is directly linking an increase in the rate on capital gains to full expensing. One would, in other words, pay for the other, and using that as the trade-off that he's proposing in order to limit stock buybacks going forward.
If your stock is cheap and you don't, and it's a better deal than something else, it makes sense. If it's not, if it's not, you got no other ideas. You know, one of the things that happened was when cash-based bonuses for CEOs got unpopular and it was performance-based, we went into stock.
Well, right. If it was based to earnings per share and you buy back shares, you
that's what I'm talking about. And if it's based on, but if it
most of it.
No, but if it's based on stock appreciation, right. if you retire more stock so that you own more of the company, CEOs have an incentive to
Absolutely.
do buybacks for their own compensation. Right. That was one of the unintended consequences of taking away cash compensation.
Right. What's the unintended consequence of this plan?
What do you mean? How's this going to screw things up?
Like everything has unintended consequences.
Capital investment is done when a company thinks, and these guys never know. I'm not saying that they know everything, but when they think they're going to be responding to increased demand or whatever, it makes sense. And to just try to induce, there may be some tax things to where you could induce that, I think, but usually you want to let companies decide on their own what's best without sticking your nose.
Look, if the tax structure is already stilted, then you are already off putting incentives for one behavior over another. I mean,
right. I'm just not willing to say all buybacks are bad or all buybacks are good.
I'm not either.
But we do currently we incentivize buybacks over dividends, right? I mean, the tax structure is set up that way.
I worry about, if I own a company, I'm not, shares in a company, and we don't own except for, Comcast. As a shareholder, if I don't like the buybacks, I can sell the stock. Or if I do like it and my stock goes up, then I'm probably happy that they're doing it, right?
I'm saying the current tax policy incentivizes buybacks over dividends. That's just the truth of the matter.
Okay. Right. Yeah, but as it's coming back, I mean, do you agree with Rubio, or you think companies should do what they? Rubio is an outlier on a lot.
It's not clear to me that buybacks are a terrible thing. I think we've talked about it. I think if there's underfunded pensions, I think that oftentimes there is a perverse incentive to pursue buybacks over other things. Would I prefer a dividend back? I might. I don't know. I think that's a larger sort of policy discussion.